if I had $1,000 here today, what cryptos would I buy? What would I think would be the best risk reward ratio? We're going to talk about that here today. I want to give you some tools as well to help you pick out some cryptos for yourself. I will tell you exactly what I buy and how much, but I also want to give you those tools so that way you can pick out narratives maybe before I do. Maybe you pick out cryptos that will do better than what I pick out. We're going to be going through all that. If you don't mind, hit the subscribe button underneath the video so you can see future videos just like this. Also, turn that bell notification so you know right when I post a video. There's also a link to Patreon in case you want to know exactly when I buy and sell different cryptos or stocks. You can check out that underneath the video. There's also some other links in case you want some free money underneath. Now, I do want to give a bit of a disclaimer. Bitcoin is up a lot this year. It's up like 40-50%. We are still down from where we were just a few days ago. I mean, I am recording this on Friday, to be clear. So we raced up from 15,000 around the FTX collapse, 15,500, all the way up to 25,002, got rejected at a pretty important level. Now we're at 23. I don't know what's going to happen over the next week. I don't know what's going to happen over the next month. I don't know what's going to happen by the end of the year. These are educated bets, and these are where I think crypto will be in the next few years. I can't tell what's going to happen with wars. I don't know what's going to happen with inflation. I have my ideas and my predictions, but if you're betting everything on the smallest crypto that I pick out here today, that's not going to be a wise decision, right? There's a reason why we do this over the long term, and that's because it's much easier to predict what's going to happen. Also, I would suggest probably diversifying. If you have $1,000 and this is the first investment you're ever making, you might want to consider investing in, making more money. If you're making less than $30,000 or $40,000 a year, you might consider diversifying as well. If you have some more money and you have everything in crypto, you might consider buying some stocks or some real estate. I have equities, I have stocks, crypto, and I have real estate as well. So I am pretty well diversified myself because I think there are different risk to reward ratios for all these different assets. Now, with that in mind, I want to talk about something that a lot of people misunderstand and don't understand when they start investing in crypto. This is one of those tools that we're talking about. A lot of people don't understand that price doesn't matter at all from one crypto to the next. Because Bitcoin is around $23,000 and Polygon's at $1.27, Bitcoin is not necessarily 20,000 times bigger than Polygon. What you should really be looking at is market cap. And a lot of people that have been around crypto for a while probably know this, but just stick with me here for a second. Market cap's the only thing that matters because all these different tokens, all these different cryptos have different amounts of circulating supply. They have different amounts of tokens. Another way to think about it is if I have two pies and I cut one pie into 40 pieces and another pie into 4 pieces, they're still the same amount of pie, right? That is really what happens with cryptocurrencies. They're cut up into all different amounts. Some of them have more circulating supply at first or less, and then they get diluted over time. What you really want to look at is the market cap. That's one of the most important things to look at to see, how big and how much potential does one crypto have versus another. Now, there are a lot of other things that matter as well. We're going to be going through just a few of them right now, but inflation really matters. With Bitcoin, if we go to Bitcoin here, the circulating supply is 19.3 million. The total supply or the max supply is 21 million, which means about 10% of the supply will be added by the end of the last Bitcoin halving. Now, you have to go into each specific crypto, look at when they are actually going to be diluting or when they're going to be hitting the market. As you can see here, Bitcoin has halving, so the amount of supply continues to taper off, and it's going to be about 100 years or so before the last Bitcoin is mined. Now, with that in mind, we have about 2% inflation right now, but it's going to continue to go down over time. That's one of the big price drivers of Bitcoin, is that it's harder and harder to get. Compare that to some other cryptocurrencies. For example, Avalanche, right? Avalanche has a circulating supply of 315 million. The max supply is 720 million. If we go over to tokenomics, we can actually see that a lot of tokens will hit the market over the next several years. If we go to February 2023, that's where we are at now. We're expecting about the supply to double over the next 7 years. Now, That means a lot of people will be getting rewards. A lot of people will be getting tokens, and a lot of them will probably be selling, right? Whenever there's more tokens hitting people's wallets, they're probably going to be selling and taking profits, moving it around. So that can add a lot of selling pressure. That means if the market cap stays the same and the amount of circulating tokens doubles, that the price would halve. So we need to have more people buying. If there's going to be more circulating supply, there has to be a better reason to buy than to sell at that point. So I would be careful of buying anything that's too inflationary. Basically, you just need to have more buyers when that happens. So just because a token's more inflationary doesn't necessarily mean that I will not buy it, but it means that the headwinds over the long time will be much harder. Another thing that you want to be looking for besides just inflation is the narrative. You want cryptos that have a good narrative. Now, of course, if something has a big event coming soon and then there's the event actually happens, sometimes there's a sell-off when that happens because some people were buying up till the event and then sell on the news of the event. So I would be careful about buying anything too late. Basically, if you're looking at crypto and it's up a lot, it's probably had some big event or some big piece of news. You don't want to be buying at that point because it means that it has had a big run up and a lot of people do like to take profits. And then last thing, adoption matters, right? There need to be more people that use the crypto that you're buying over the long term if you're going to hold it for the long term. Basically, the shorter that you hold the crypto, the riskier it is. So you want to be buying cryptos that you think will do well over the long term, continue to gain adoption. So let's get to the part that probably everyone's waiting for, which is how much I'd spend of the $1,000 on different cryptos. First of all, let's just get the easy one out of the way. I'd buy Bitcoin. I think there's still a huge push for Bitcoin adoption. There are a lot of people that want to buy Bitcoin, especially large entities. They want to buy more and more Bitcoin, and not just companies like MicroStrategy, but even governments, people in other countries that have huge amounts of inflation. They realize that the world is becoming more and more centralized and the governments are becoming more and more overreaching. So Bitcoin, I still think will do really well over time. And at this point, it's one of the only cryptos that's not going to be probably labeled a security in the US. The SEC, or the Security and Exchange Commission, has been cracking down on a lot of cryptos recently and crypto exchanges. They're talking about banning staking. So at this point, I think Bitcoin is the least risky. And I think it's been around the longest time, obviously, and will probably be here to stay. If it gets up to gold's market cap, it would have about a 20x from here. And I think it can do much more than that over the next 10, 15 years. So I would put probably about 50% or so, $500 into Bitcoin right off the bat. Now, I actually have more than that in my personal portfolio. In my crypto portfolio, I am more heavily weighted towards Bitcoin even than that. But if we're starting with $1,000, I think it makes sense to be a little bit more risky because we're starting with a pretty low amount. Not that $1,000 won't help over the long term, but I have much more than that in my own crypto portfolio, so I am a little bit more risk averse. The next crypto I buy is Ethereum. Ethereum has the Shanghai upgrade coming here very soon, which means that people will be able to unstake their Ethereum over time because right now, all the Ethereum that's staked in the 2.0 contract is just locked up. People can't gain access to it. Now, I think this will be a good buying in opportunity because I think a lot of people will be worried because so much of the supply is in the 2.0 contract. That will be the narrative causing the price to go down, I think. And I think Bitcoin dominance will go up as well. So Ethereum will fall down, I think. But over the long term, it means that people will actually know when they're going to be able to get their crypto out of the contracts. And with Ethereum recently becoming deflationary, I think that will cause a lot of people to want to buy it for the next bull cycle. This is when the market's not crazy busy. This is when the chain isn't super busy with millions of people coming into NFTs. Right now, this has been a quiet time, and yet it's still deflationary. You can get 6% rewards as well, or 4% depending on the timing. I think Ethereum will do really well, and I definitely would allocate towards Ethereum. I'd put about 20% or so in Ethereum, so $200. I'd also buy Polygon. Polygon, I think, has a great narrative right now. First of all, it did set their ZK EVM mainnet beta date, which is in March, so that's pretty soon here. They also have been making so many big partnerships recently. with DraftKings, Adobe, Starbucks, Adidas, Prada, Meta, Stripe. I think the narrative for them is that they're going to bring in a lot of users. They're also cheaper and faster than a lot of other cryptocurrencies. And it is a little bit more inflationary than Ethereum and Bitcoin, but I still think it's pretty low compared to a lot of other cryptos. The next one on the list I would buy, and I actually hold all 4 of these right now, is Phantom. So Phantom, I believe will do really well because Andre Cronje recently came back and he's one of the best developers in crypto. And also their Phantom FVM, which is basically like their version of the EVM, Ethereum Virtual Machine, is scheduled for this year, which will help the chain, I think, get a lot of excitement and will help them over the long term in terms of privacy, transaction fees, and that kind of thing. They're already very cheap in terms of TVL divided by market cap, so they're already being adopted a lot right now. And I think they do have a lot of upside potential because they are around $1.2, $1.3 billion, which is much smaller than some of the top 10 cryptos. I mean, that's 10 times smaller than something like Cardano. Now, just because I don't pick some of these cryptos on the list doesn't necessarily mean that I dislike them. I just think that there are better opportunities. So with that in mind, I would probably put around 6% in Matic. I think it's a little bit less risky than Phantom. In Phantom, I'd put about 4%, and then I'd keep about 20% in cash. And I realize, if you are just wanting to put all the money in crypto, you can change those numbers around. But I think it does make sense to keep some in cash, especially if you just have $1,000 and you don't have any more income to continue to dollar cost average into crypto. I'd keep 20% in cash because we may fall down from here. Also, we may have other opportunities in smaller altcoins. Maybe you want to try trading different narratives like AI or the metaverse, which was last fall, or maybe it was a year and a half by now. A year and a half ago, the metaverse was. It's crazy how fast time has passed. But I think there would be a reason to have some money on the sidelines in case we see a further dip. I wouldn't put everything into the market at one time either. I'd probably buy these different cryptos I've talked about maybe over a couple weeks just to kind of smooth out when you're buying, because at first it can be pretty intense or pretty depressing when you buy something like Bitcoin, let's say for 23,000, and then it falls down to 21 or 20, then you just sit there having to watch it. Sometimes it can make you worried and then you sell out of your investment. So I would probably invest over a couple weeks and then keep that cash on the sidelines for a rainy day. I do have cash on the sidelines myself, so that way I can buy into crypto or stocks or real estate in case we continue to fall down, and I continue to buy more of these different assets. I don't believe in going all in at any time. Some people like to do that, but I think for the most part, you want to keep your head straight, and one of the easiest ways to do that is to keep some money on the sidelines. So let me know your thoughts on all this underneath the video. What cryptos would you be buying? Hopefully I explained it. So again, 50% Bitcoin, 20% ETH, 6% Matic, 4% Phantom, and 20% cash. But let me know your thoughts underneath the video. Again, this is not necessarily what's going to be the best portfolio, but that's how I view it. That's one of the better risk reward portfolios, and it's somewhat similar to my own portfolio. My weighting's a little bit different, but those are the 4 cryptos I hold. I am biased because the fact is I am buying these cryptos. That's what I believe in, and that's why I'm telling you. Thank you so much, and I'll see you in the next video. Bye.